everyone. I will be talking about the lesson on 3A and 3B, which is taxation, tax evasion, and tax avoidance. Taxation. Taxation refers to the act of a taxing authority actually levying a tax. History of taxation. It is a matter of general belief that taxation are of recent origin, but in ancient time also, taxes were levied in some form on sale and purchase of merchandise. It was all over the world. Modern definition. Tax is imposition of financial charge upon a taxpayer by government or other functional equivalent of the state. Government policy. The organizational history of the Income Tax Department starts in the year 1922. In 1961, Direct Tax Advisory Committee set up Direct Taxes Administrative Inquiry Committees constituted, and Income Tax Act 1961 came into existence, which extended to whole India and became effective from 1st of April 1962. Every year, a budget is presented before Parliament by Finance Minister. Most important component of budget is Finance Bill, which contains amendments which are sought to be made in the area of direct tax by central government. Types of taxes: direct taxes and indirect tax. Direct tax. The tax whose burden falls directly on the taxpayers are direct tax. Indirect tax. Indirect tax are the taxes in which the burden of paying tax is shifted through a change in price. Income tax. It is a tax on the income of an individual or entity by government. It was introduced in 1860, discontinued in 1873, and reintroduced in 1880. Income tax has two parts: personal tax and corporate tax. Per, on the personal tax, it is levied on the income of individual, undivided family, and other association of people. Corporate tax, it is levied on income of registered companies and corporations. Personal income tax. Income from all the sources are considered. Certain rebates, deductions, expenditures, insurance are not considered for levy tax. It is progressive. If income increases, tax rate also increases. It is levied on the basis of slabs. Slab for personal income tax. This table is all about the annual income tax rates for all individuals, Hindu undivided families. Corporate income tax. Rationale for corporate tax: that a joint stock company has a separate entity so taxed separately. A corporation pays taxes on behalf of income of shareholders on dividends paid to them. Corporation pays on a flat tax rates, and it is different for Indian companies and foreign companies. Corporate tax income. There are two types of company: domestic company and foreign company. In the domestic company, in their total income is 30% plus surges, educations, and a total income less than INR is 30% plus educational access. Foreign company, it has a 40% surcharge, education access, and 40% plus education. Custom duty and Octroi. Custom duty is levied on import and export. From revenue's point of view, importance of export duty is limited. Since 1991, custom duty structure was broad and now maximum rate of custom duty is 10%. Octroi is a tax on goods entering into municipality or any other jurisdiction for use. Excise duty is a tax charged on goods produced within the country. This is opposite to custom duty. Anti-dumping duty. Dumping is said to occur when the goods are exported by a country to another at a price lower than its normal value. Sales tax. This is the tax imposed on the sales of movable goods. Service tax. The tax on paid services you take is service tax. Value-added tax. The part of sales tax imposed by state government is called value-added tax or VAT. Advantage of taxes. It helps to the government in its revenue, which is used to facilitate people of a country. It helps to control inflation. It restricts government to take loan from the World Bank. It utilizes public money in social welfare. Disadvantage of taxes. It restricts common people to get extra happiness at some extent. If government misuse tax, we don't have any control on it. Tax evasion and tax avoidance. Tax evasion, an illegal practice of person or corporation that intentionally avoids paying his true tax. Unscrupulous government officials. Understatement of income. Overstatement of expenses. False or fictitious entries in books. Tax avoidance. Accountants, lawyers, financial managers. Moving capital labor to areas or countries with lower tax rates. Manipulating the tax parameters through legal means. Computing the tax. This is the formula on how to compute the tax. Please observe the formula that is shown on your screen. Why is tax evasion ethically wrong? Compromising the purpose of taxation. Peace, security, just distribution of wealth. Disobeying the government. Disobeying laws. Disobeying leaders. Tax avoidance. Ethical. Tax avoidance may therefore have been essential for economic well-being. Tax avoidance. Unethical. Loss of government revenue. Increase in taxpayers' after-tax income. Perverse effects on the equity and efficiency goals of the tax system. Thank you.